Tech giant Apple reports fiscal third quarter earnings after the bell today. Analysts are looking for earnings of $1.38 a share on revenues of about $43 billion, according to Yahoo Finance. The second and third quarters are more often not the worst quarters of the year for the company, but analysts suggest that this year, Q3 could be worse than usual. After having reported its first drop in quarter-on-quarter revenues in the second quarter of this year, the company's own guidance for Q3 forecasts is that revenue will be down again compared to 2015. That being said, of the analysts that have a position on the stock, questioned by Bloomberg, they show that 43 have a buy recommendation, 7 are on hold, and just 2 analysts are sellers of the stock. However, if the company continues to underperform with few new ideas, Tim Cook may face a lot of angry investors later on in the year. Let's have a look at what to expect. Let's take a look now at the chart. And for more analysis on this, Josh Mahony joins us. We've got to remind ourselves, of course, this is an all-session stock, so it trades after the bell when these earnings come out.
Exactly, yeah. So this is going to be a really interesting mover. Like you said, it feels like the expectation really has been on the decline recently, and we've seen that really reflected in the share price. 28% lower than the all-time highs at the moment, so we are clearly trading within a heavy discount. You can see, really crucially, that this week we have seen it selling off after last week it touched this really crucial level. Essentially, it hit this level around about $100.80, and that level is a convergence of both the previous peak that we had back in May 2016. We also have the 50% retracement of that sell-off that we had in May, at the beginning of May, and we also, if we zoom out a little bit, have got this major high that we've got back in September 2012. So really big level. It has held on to that level and is heading lower from here. So essentially we remain within this descending or falling wedge pattern. That generally is a bullish pattern, but you need the breakout. So for that to be confirmed, you need a break up above 112. Ultimately, I do think we're looking like we're seeing a bit of a negative trajectory for now, but that actually looks like a good potential buying opportunity around about the sort of $90 mark. So whether we sell off into that support level and into the bottom edge of this wedge remains to be seen, but certainly this is a bullish pattern typically, and given the fact that we've respected this big resistance level, we might actually be able to get down to another level that I'm sure a lot of people will probably be seeing as attractive in terms of buying for the long term.